Yes, hello everyone. Welcome to the next section of trade entries. And what we're going to be looking at today is inducements. So this is a term that maybe quite a few of you would have heard in smart money concept online and on Instagram, whatever it might be. But inducements is something that I only came across a few months ago, and I really did see a big change in my trading when I really did include it. So it's honestly one of the key lessons you'll learn. It's gonna be confusing at first because when you get into the market, you're not entirely sure when you've entered from a point of interest, is your trade going to be induced? So that's one of the things that you'll have to. It's something you pick up as you're more on the charts as well. But yeah, anyways, let's just get into it. So, oh, I don't know why all that is there, but I'm just gonna draw on top of it just to best explain it. So, what you can just ignore this, but pretty much what an inducement is this. Let's just say, for example, you've got point of interest right there, whatever it may be, engulf candle, blah blah blah. It goes back down. We're on a downtrend, and then we get to this point here. When we get to our point of interest, if we're doing a confirmation trade, what we want to be doing is, of course, seeing something like this, break a structure down, and then in, out. There we go, and then take profit at the bottom, TP. This is what we want to be doing. Instead, what an inducement is a focus on this area right here. Before we get into any of that, I'll just explain what an inducement is. An inducement is pretty much when traders are all attracted to like a point of interest. They think it's okay, goes down. They think that was perfect, okay, and then either stops or break even. Boom, it goes down, takes all of that right there. So that's what an inducement is. Happens on the higher time frame, happens on the lower time frame as well. Happens everywhere you can see on the charts. And I've got a perfect example of what happened recently. Especially, I think one happened last week as well that I managed to get into one of the inducements. It was a GU trade on my Telegram, I believe it was. Um, but yeah, this is what an inducement is. You get to that area of interest. You've got your standard market structure. Let's just call it Wyckoff, whatever it is. Goes, clears liquidity at the top. Then breaks down. Let's say it breaks down even further. So you've got your confirmation right there. Then usually what we're taught in a Wyckoff or whatever it is, this is your point of interest. Now, traders are induced to sell from there. And you'd be completely valid to think so. However, what this style of trading is once you see that happen, the real move is not from there. It's not from that point of interest, but rather it's right above there because you've got 2 points. The first one is the stop losses and the break evens right there. Because as soon as traders enter on this right there, what's made? Liquidity. The liquidity of stop losses and all the break even trades right there. The second thing that happens there is this liquidity void right here. So of course, you're going to have some kind of order block at the top, but it's the liquidity void that we're going to be looking at right there. So you've got two sets of liquidity made just in that moment right there. Now, what the inducement trade would be breakdown first. Let's just say it moves from there. We get that actual break, and then the entry, rather than that, would be this right here. Anything above this high. So between this zone right here, your entry could be here, stop loss above there. Entry could be at halfway through the liquidity void. But personally, I would always want to take it just above this high right here. So when you set your limit, it looks stop loss and TP. at the liquidity zone right there. So what it is, quite easy to understand. Traders get induced, but the actual movement will come after that. So you're going to have something like this. You're going to have a lot of this kind of trend line that builds up right there from the top to the bottom. You're going to get clean, or shall I say clean in inverted commas, clean order flow from there, another one from there. And then that makes that trend line liquidity. And what we're aiming for is a purge on that liquidity, and then boom, it's done. And then we take profit wherever it may be. Now, time to go through an example. Case study right here. So we are in a downtrend. We have liquidity on the downside, and we are approaching a point of interest, which we have now reacted to. So we've got liquidity down here, down here. We're obviously in a downtrend because that's how it is on the higher time frame. And this is our first point of interest, this area right here, refined to this candle up here. This is I believe it was a 15-minute or a 5-minute, 5-minute. We've got to that area and reacted to it. Then what happens? That reaction right there, you see that right there? Go to the next slide. Now what we have is we have created even this area right here. So we've reacted to one point. Now we've got this other point that we're going to be looking at. So we have now got a reaction to this area now. So we've got this valid order block, this valid order block as well. That's being reacted. So in a way, it's double as effective in my eyes because of the order flow. Then we've slightly reacted to the top, to the main order block, the gray line that you can see. And now, what would we expect? We'd expect downward movement from there, right? We've partially broken through this with the wick. Okay, so now we're moving down. Now you can start looking for even more sells, 1-minute sells, whatever it may be. So potentially you could have gotten this sell right here, this sell right here. So that's 2. And then potentially even more of these. But when we start to see this clean order flow happening right there, and that trend line starting to form, we can expect that this is going to get blown out, especially if we're approaching some kind of area over here of potential resistance to the downside. And what happens? We get that inducement right there. Because the thing is, we reacted off this right now, right? We reacted down, saw that trend line build up. And to me, the way I realize an inducement is occurring is that trend line. It's that clean order flow to the downside, and then the move that's struggling to go down. You see how every time there's a pullback, every time there's a pullback, every time there's a pullback, and it's not breaking too far low. So in my eyes, I still see some unmitigated areas there. Now that is exactly what an inducement is. Comes to take the stop losses above here. Stop losses right there. Trendline liquidity. We don't use trendline liquidity much, but in this scenario, it really does make sense, and you understand it on a deeper scale. So when you go back onto the charts, backtest this, see how often it happens. Price reaches a valid point of interest, entry taken down, stop loss is set to break even, price reverses and straight back into the point of interest. I mean, I've had so many times where I would be in a trade and I'm so confident that it would go down, but it'd come back to take me and then go back down. And after a while, I had to question what was going on. So as I backtested, I saw that this is something that was happening more. Obviously, I did some research online as well, saw that this is something that actually exists in smart money concepts. And this is if you want to take note of this diagram, this is exactly what you should be aware of. the probability of you winning from this trade is so much higher than this trade right here, because you know for a fact now you have induced the sellers from here, and you've taken the stop losses, break evens, come back into there to mitigate some of the orders that were left there and back down. Now that is what you call an effective entry. Please backtest this, have a look at it, see how it works, because it's one of the most effective things you can employ into your strategy. So, guys, I hope this all makes sense. And yeah, everyone, I'll see you in the next video. Take care.